great to see you. And I see a lot of familiar faces. Thanks, Marty, for inviting us. I'm excited to discuss this interesting panel. My name is Susan Akbarpour. I'm a serial entrepreneur, board member, and the managing partner of Candou Ventures. Candou Venture is an early stage SPV-based Silicon Valley fund. And my partners and I were serial entrepreneurs with multiple IPO, merger acquisitions, M&As, and experience under our belt. We had over 50 investments as angel investors and LPs of the VC funds in Silicon Valley over years. But finally, we decided to start our own fund. And our first fund in the span of 3 years showed 16x return for our LPs and their family funds, over 40 family funds that we're investing out of. And we started our second fund in 2020. Again, great results. We had 1 unicorn in the first fund and 2 upcoming unicorns coming up. We have an amazing access to deal flow because we've been in Silicon Valley forever. And we have different networks of entrepreneurs, repeated entrepreneurs, as well as prominent engineering schools and business schools. I'm a Stanford GSP alumni myself and involved in different networks in the Stanford. And we're not charging management fee, which is really unheard of, I guess. And we allow them to, learn and co-invest alongside of us, and we make sure that we negotiate with the companies because we usually have board seat, and we negotiate pro rata, and we allow our LPs to co-invest alongside of VCs in later rounds. And today we're discussing why women in VCs. So let me give you some mind-boggling statistics. In fact, when I was researching for this panel, I actually got surprised myself. I'm sure you knew that 40% of the US-based companies have been founded by women. These women, these are startups led by women, in 5 years period show 10% higher revenue than the startups led by 5 male counterparts. These startups, these entrepreneurs, female entrepreneurs, have also outperformed the male counterparts on 4 other KPIs: ROI, performance for the first round of capital, and capital efficiency, as well as revenue. So when you look at this, you feel that, so why only 1% of the female founders got private equity investment in the last 10 years? And I guess most of you say that, hey, we like to invest on like-minded people. And that's true. They don't look like you, probably, these female founders, hopefully. They are acting differently, their work style is differently, their teamwork is different. And they also, the problems that they're trying to solve might be very different with the problems you're solving. So, and now when you look at the percentage of the female VCs, you see that only 7% of the managing partner and general partners in VC firms are women. And why is that? Because they're not performing well? That's not true. They don't have money. 1/3 of the world wealth, which equals to $70 trillion, is controlled by women. So that's not a question of money. They outperforming when they invest in high risk, high return asset classes. They have outperformed male partners and also FTSE 100 index. I shared that study actually in my LinkedIn today, so I encourage you to go and read that. Among 2,800 investors, male and women, they outperform the index as well as the male counterparts. So what is that? That we're not investing, we don't see more female investors, and per result, we don't invest on female-led startups. That's what the panel is going to discuss today. And today, I'm happy to discuss this topic alongside of these powerhouse women. Julie, let me get everyone's name right. Pegah, Ebrahimi, who is here with me, and I actually asked you to join me here in the panel. Oh, good. So I can see myself in there. That's helpful.
Don't look this way.
Yeah, I know. Pegah was the former CEO of Collaboration of Cisco and also COO and CIO of Morgan Stanley. Now she is advisors to many CEOs. One of them is one of our portfolio companies, which is also a unicorn, Akbarpour, as well as she's investing also, and she's an LP with us, and she is advisor and board members in many companies. I have Julie Castro Abrams. I think can I see you on the panel? No, I don't have my glasses. Anyway, she's the founder of How Women Lead and managing partner of How Women Invest, a fund that I have a pleasure of being an advisor to. And they're merely investing on 100% female founders to start up. We also have Carrie Rue, the general partner at True Wealth Ventures, and Mary Wheeler, founder and managing director of BioRock Ventures, as well as Alexandra Wilkis Wilson, co-founder and managing partner of Clerisy Ventures. So with that, let me ask the first question, Pegah. How our family funds can get more access to these deals or startups that are led by women? Because as we could see, they are performing. So it's just a question of having access to these women.
Yeah, I think both access, just in tech companies in general, I think the environment's changed a bit, right? Because you've got VCs that are pretty large scale that are getting a bulk of the access. And then it's really, I think, twofold. If you're investing in VCs, I would say if you want to do more direct, find niche VCs who will really have a specialization in the area, because they'll tend to get much more of the deal flow that's specific versus if they're very broad-based. And on top of it, I mean, in the last panel, we were talking about how do family offices get access to more direct deals, right? Like if you're in a big fund and there's, a massive LP base, most of the time, if they're going to go to any of their LP base, it's going to be their top ones, or they're not going to go to their LP base because they have these massive funds. So if you have a $2 billion fund and there's a great company, you're just going to, in the next round, want to just put more money in. Whereas in the niche players, so for people who have expertise in an area, well, they'll take biology, or they'll have like Susan's fund where they have a really great names that come from a different flow than a typical VC. So you want to pick kind of the ones that are really focused in an area or just have a real edge in some space. And I think you'll do much better in building relationships with the partners and also building relationships with portfolios.
That's great. And also there are platforms that have been basically established for that reason. And with that, I go to Julie, the founder of How Women Lead and the managing and general partner of How Women Invest, and ask her, why did you decide to only invest on companies that are 100% led by women? And what are those metrics that made you to make that decision?
So Julie's actually not on the right Zoom where she can be on screen yet. So we just sent it to her. She's going to join imminently. So
we'll come back to her. What's the next question?
Yeah, the next question.
Very similar.
Yeah.
I could answer the question because I invest specifically in women too. So I don't know if you want me to just quickly do that.
Yes.
Okay. Thanks, Marty. So for us, it was really based a lot, Susan, on your points at the beginning, which is that there's literally like a financial arbitrage opportunity here, that when there are more women in senior leadership teams, the companies actually do outperform according to, lots of data, starting with, McKinsey in 2010 and, continues to elaborate. And yet for reasons we could probably talk about all day that sometimes have to do with implicit bias and things people don't even realize they're doing, they aren't getting funding at the same level. And so for us, that just looked like opportunity, right? You look at things that are, undercapitalized and promising. And so we are explicitly investing in companies with at least one woman as a financial thesis, and, you know, not just as feminists. Hopefully over time, frankly, our thesis gets eradicated because it becomes standard practice that you would look at diversity, not just gender, but, you know, socioeconomic background and ethnicity, et cetera, because lots of data going back into science, even not thinking about investing, shows that diverse teams come up with better ideas and actually work better. I think there's also benefits to your point, Susan, about women act differently and work differently. And so having some of those, you know, characteristics of emotional intelligence and relationship building, et cetera, on your team actually adds value. But this should be standard operating practice for funds. And so over time, hopefully we don't need funds that have a focus on women, and I can have a different theme. But to, you know, the question, I think that puts some onus on LPs and family offices to ask that of their GPs, of their fund managers, to say, what does diversity look like on your team and within your, you know, portfolio? Because I think I'm missing out on returns, you know, that I could be getting by having more diverse teams. And actually there's data that shows that when there are more women investment partners at a fund, that fund is twice as likely to fund a female founder or 3 times as likely to fund a female CEO. So it doesn't mean that you have to have a fund like mine that's explicitly focused on gender. If you have Mary or Alex or, you know, Susan on your GP team, you're likely to get more diverse founders actually coming to your firm, you know, winning deals with those kind of founders. So I think some of the onus could be on family offices to demand it of their GPs.
That's true. And also the female entrepreneurs are pitching differently. Us as women can understand, you know, those differences and appreciate it. Once, I mean, while it may even look a little bit different to male VCs. In fact, I recently wrote an article in Forbes, and it was exactly on these styles and how female entrepreneurs are pitching to VCs and how we can actually misread all those gestures, attitudes, and behaviors that a female entrepreneur has. So having a female GP in your firm can definitely help you to not to imply that maybe uninformed bias to your pipeline, and have a better chance in finding these diamonds in the rough. And with that, I want to get back to Mary, because yesterday we were talking and you mentioned that you have invested exactly 50-50 on female and male entrepreneurs. And that was interesting for me. And I don't know if it was by design or it just happened. So I appreciate if you can tell us about your experience. Let me make sure that Mary is on the call.
She is. Mary Wheeler.
Yes, she is. Yes, great. So let's see how that happened. And was it difficult, or you just... and what the results and pros and cons of that division?
Sure, yeah. So I think just underlining what was already said, we are actually one of those niche funds that you guys are just talking about. We don't invest with diversity as the top level, but rather as a regular criteria. And so BioRock invests in biopharma startups, therapeutic startups, startups developing medicines, including COVID vaccines, right? That's what we do. And we have a specific flavor of that. Some people would call that niche. It's focused, but it's actually the second largest area of VC after all of software. It's a huge category, right? So that's what we invest in. But, to Carrie's points as well, as a female GP investing partner, I have ended up investing in a more diverse pool than the average VC, even in my own life sciences space. It wasn't actually part of the criteria. Other than that, again, as others have said, diversity has been proven to result in better outcomes, better returns for all of us. And so it's certainly something that I look at. Along with everything else that goes into investing in a therapeutic, including, all kinds of technical stuff and regulatory stuff, et cetera, et cetera. So it just happens in the course of business. And like Carrie said, I certainly hope that is the way it will be for everyone else. And also in terms of access, I think you find a lot more fund ones and emerging managers are led by diverse GPs. So it's actually a great combo with family offices. you know, open your lens to the diverse managers that maybe are not in your network, because a lot of those are the ones that family offices are going to have better access to.
Thank you. And Marty, may I ask the team to bring Julie? I think she is somewhere in the panel, but I can't see her. Yeah, I think she needs to be approved as a panelist. So we have other people, participants, 28 participants I see in the panel. So I would love to receive any question from the crowd. Okay, and Julie has been promoted to a panelist. Okay, great. Yes. Hello. That's how women roll. Okay. So Julie, thanks for accepting our invitation. I know that you have just done an operation on your arm, but you're one of those strong women that I know that nothing can defeat them.
What you get for being an athlete? They say it's good for you, but you know.
Yeah. Welcome, Julie. So you listen to our conversation, and we want to hear about you and your experience.
Sure. Well, I mean, I just want to, if I could just underscore what was just said. Listen, I actually don't want other people to know about this because we're the ones who are going to make the money. Let's be really clear. Like, if you're a venture capitalist, your whole job is to go find the markets that are about to take off that other people aren't seeing. Because right now, the last session, people were talking about valuations, too much money being thrown at stuff. If you're not throwing money at these people, then we get great valuations. But this is the thing. We have more women graduating from graduate school, undergrad, than men across the country. We're at this, women are, in a couple of years, we're going to have 60% of the wealth in this country. So there's literally no reason that we shouldn't be investing equally in these companies. And Susan and I have been like watching both what people say and what is the truth about like deal flow, right? Our deal flow is so high tech, it's ridiculous, and it's completely balanced. The suggestion that we're only getting beauty care product companies is, well, we're not getting that, is silly. But this is the thing we all know. We know people like us. I know, a well-educated, white women living in Marin, because that's who I am, right? So you have to actively work outside of your networks. You have to go talk to the funds serving Black and brown and women run companies and ask them to partner with them. You're not going to get the deal flow if you just kind of expect it to go knock on your door. I'm getting the deal flow. So I would just say, like, it is a hot, exciting market. Our companies are growing super fast. They're
not overvalued.
Not at all. The couple who were, we didn't need to take them. So I'm not feeling that sense of competition that most venture capitalists are feeling right now. I'm like excited about the hot deal flow that we're seeing. I'll just say one more thing. There's really terrible stuff. I want to make money. But there's a little bit this other side. So I want everybody here to be thinking about this. Your sisters, your daughters, the women that you care about in the world, 85% of them get sexually harassed when they go to ask venture capitalists for money. Nobody wants that. You guys don't want that to be happening. Absolutely. It's horrible. Wow. The other thing that's happening is women are absolutely told, if you don't have a male co-founder, you'll never get funded.
Yes.
And Susan knows this very well. What ends up happening is, you got this guy friend, you worked with him, he's a good guy. You say, I need to have a male co-founder. You go on a couple of pitches with me, but basically I don't need you to do anything. It's my idea, it's my baby, but otherwise I'm never going to get funded. And then when you go to have an exit, all of a sudden he's like, well, hey, listen, put me in the mix. And all of a sudden it's disastrous to all the investors. It's terrible for the market. And so all of us need to be really paying attention to what is happening and how it's affecting all of us being able to make money consistently and sustainably over time because of the imbalance in the market. So I love that you're getting 50-50 male and female deals, because that's literally our population. There's no reason it should be anything else. And if it is anything else than 50-50 and you're about to be an LP in a fund, you better look around, because you're not getting the best performance. And right now, with all these hot explosions of valuations, the women-focused venture firms are going to outpace everybody else.
Thank you.
You know,
Julie. That was
just my
amazing.
opinion.
Thank you. So I would love to get questions from the audience. Is there any question that the audience may have? We can get it in chat, or I can ask more questions from the panelists. But is there any question coming?
Alexandra, introduce yourself yet?
Alexandra.
Alex,
I'm so sorry, Alex.
Because I just want to highlight that Alexandra.
So Alex, I think you were talking about 50-50 as well, right? Or am I mistaken?
She must be 80-20 female. Like Alexandra, you're
No,
like one of the greatest female investors out there right now. Introduce yourself.
Well, that's very, very kind of you. So I'm Alexandra. I launched a growth equity fund called Clerisy, and similar to Mary, we don't have a gender-focused mandate in terms of what the types of founders we need to officially back. We are sector focused in the consumer sector and what we call techsumer. However, I think by nature, by virtue of the fact I'm a Cuban American woman, I'm a 3-time founder, my network skews heavily female in terms of female founders and entrepreneurs. And I even wrote a New York Times bestseller with my Guilt co-founder on how we built Guilt and changed the way millions shop. And so, and the purpose of writing that book was to encourage entrepreneurship, but specifically among women. So, you know, I think by the fact that my co-founder in Clerisy is also a woman, her name's Lisa Myers. She came from El Catterton. We're investing in consumer. We have incredible networks. You know, we're seeing a lot of diversity, not just gender, but in terms of color as well, and geography, and that's important to us. We want to invest in the businesses that are going to yield the best returns and that are truly innovating and disrupting. And so we've made 2 investments so far. We led 2 Series B rounds. The first one is female founded. It's a mother-daughter team. The second business is founded by and led by a white male. And so right now, out of 2 investments in our first fund, which is so far an $80 million fund, we're 50-50. So let's check in when we've made some more investments.
Keep going that way, yeah, definitely. So Pegah, you're also advising CEOs, and you're in the board of your companies. Tell me about what the value that you're bringing, in your view, or female board members to these boardrooms.
Yeah, I would say, look, I advise companies like Canva, Sneak, late stage companies and early stage companies, Apply Board and Data Robot and all these guys. And so they have tremendous cap table, great VCs on their cap table. And sometimes, you know, people ask me, don't they have great VCs in the cap table? Like, why do they get you as an advisor and all these things? So what are they missing? And a lot of the times, you know, because and not necessarily, there's a lot of great male advisors too, but what they're missing is sometimes someone really being not just empathetic, but really being able to see a lot of the other problems they're solving and be thinking ahead on how to solve them, instead of just, hey, give me one problem, now I'll solve this. And what I tend to do is I'm constantly thinking about those companies. So even if I'm not in a conversation about that company and I'm having some other conversation, I'm like, this will be really useful. Let me cross-pollinate these 2. And I think naturally, women tend to be a lot more cross-pollinators by nature. And so they're not always thinking me sometimes. And I definitely am a lot of times thinking me, but I just figure out there's going to be more value if my network gets advantage of it. And so they get a lot more of the kind of confidant, someone they can say certain things to that they wouldn't tell their regular investors, and really plan for some of the problems and not feel like judged as much for later down the line. So that's what the types of pieces are. Because look, money's everywhere. I would say if you're a founder, for most founders, finding money is not hard right now. It's really, how do I help scale this? I have this idea, okay, I got money. How do I actually think about the right people on the team? How do I really think about the first, you know, if they're early stage, the first 5-10 customers that are going to be meaningful for me? How do I think about the strategy? And a lot of those pieces that don't necessarily have to do with money. So you really have to come to the table with more than just money nowadays to get access to the best deals. And I think I tend to focus what they're missing and figure out how I can supplement the areas they're missing in.
That's true, you know, and you all can see with more GPs in this industry, we're gonna have more representation in boardrooms. by these GPs that naturally end up taking a board seat in the companies that they invest in.
And I will say one other theme that's happening right now, everyone's thinking about, okay, female founders. I think another big theme that's going to be coming for a lot of these CEOs that they're talking to me about is in a few years, how your cap table looks like is going to actually become, right now there's talks of it, but if you've got really, you're talking about how your employee base is so diverse, how your, your leaders are diverse, but then, and your boardroom's diverse, but what about all the people that are making money off your company that are shareholders? Are they diverse? And I think it's starting to become more and more important to them. And I think that's another also notch on the belt of just having more female GPs is I do think, people will start seeking out more diverse also cap tables over time. And I don't think we're that far away from actually people having to talk about their cap table and how much diversity they have.
As I said, there is $70 trillion that we're controlling. So
Susan, can I
Julia, you wanted to add something?
Yeah, Julie, I just wanted to actually get back to you because with How Women Lead and all the initiatives that you have to push more women in boardroom, I think you are in the forefront of that movement. So tell us.
Well, hopefully I'm gathering some friends to help with that. But I love what you just said. And I'll just give you a little experience from us. We have this network of top women executives. We do things like get women in the boardroom and stuff. And so last year I said, hey, and we focus a lot on diverse groups of women, right? Women of color. So I said, hey, we're going to put this venture fund together. Let me know if you want to invest. Without it being truly very intentional, half of our LPs are Black and brown women, you guys. These are, and they invested the same rate as everybody else. And 30% of them have now invested in another venture fund. And in a couple of cases, they're actually influencing the direction of that venture fund with the questions they're asking to some of the comments earlier. So I just think we all have a bias that somehow that Black and brown women or women don't have money or don't want to invest. And one of the things we found is our women leaders are just so busy. And anyone who's a woman knows this thing. You're racing up the ladder. Maybe you're raising some kids. If you haven't thought about venture investing, someone that a friend of yours, and the network effect needs to say, hey, let's do this together. And if it's a relatively low entry point, once she gets in, she's sold, she's having a blast, she's going to start investing more and more of her time. So that's a little bit of our thesis. I'm super excited about Alexandra. I would love to actually hear when you're leading, are you syndicating thoughtfully, like who else is on the cap table? Is there any pressure to make it more women leader, run venture firms?
Yeah, great question. Our first investment, the one I mentioned, which was a female mother-daughter duo, we led the Series B and we brought in investors around us. And one of the funds that we brought in around us is called Rain Ventures. Some of you might know it. It's 2 Black women who are amazing. And, did we bring them in because they're Black women? We brought them in because they're awesome investors and they can add value in areas that they're much more tech investors. We're very consumer investors. We thought that would be a powerful combination. And we brought in some other funds too that were, led by men. So I think diversity is important. I think when you're investing in a company, you want to get as many smart people around the table who can add value. And I think diversity is an important part of that.
Are you seeing any difference in how the male and female GPs are, like how active they are, or is it more based on the size of the fund? Is there any theme anybody's seeing yet?
Well,
I'll switch gears a little bit.
Pitch differently. That's my experience. Some stuff that to me are a strength. Not to my partners because they are very used to working and leading and investing on women, but I see that, the pros to me may actually be considered cons to some male VCs. And I tell you, for example, how some of these examples, right? So let's say the problems that the women are going after to solve are very different. Let's say I created basically universal shopping cart and the company that I was running. And we were processing tons of information about whatever the women wanted to buy beforehand. When I was presenting to VCs myself, they were just like, is there any problem with that? women go and do window shopping. I said, no, that's not true.
Yeah.
You know, this is different with what the men are expecting too. So
yeah, and I think Julie, you were more mentioning for the GP side. I would say I do, because I work, because when I advise, I talk to a lot of the GPs that are already in the cap table, right? And I would say it depends on the really, it's really GP by GP, but if I had to generalize a little bit, I do think, and part of it is maybe because the female GPs look like similar to the corporate world, they're trying to go up and prove that they're adding value. They tend to just hustle way more when they get a deal right now, because maybe it's not because they're capable, it's more just because they're trying to also prove out, because there's just less female GPs in funds. So if you're the sole female GP in a fund, you're just gonna want to show how much your CEOs love you, and so I would say it's more because of that. I just see them, like the GPs that asked me for help since I was CIO and I was doing a lot of software enterprise. It's the female GPs I know are the ones always asking, what about this one? What can you do with them? Can you introduce them to this salesperson? So I just feel like they're kind of trying to pave their, yeah, they're just, but a part of it is I do think it's more they're trying to pave the way, and so they have to sometimes hustle twice as hard.
Yeah, this is a new path for us. It's natural that we're trying to conquer that, and for that we need to work harder, and we need to show that. And I think, look, I think everyone talks about this word collaboration. I was a COO for a company, and in COO world, you have to be collaborative, because half the time you're not getting direct credit for things and you're just being a team player. And guess what? There's way more female COOs in most Fortune 500 companies, because you kind of it's sometimes thankless, sometimes you're making other people look good, and I see that in the GPs as well, where they play team and collaborate more, so they're not worried about getting the credit as much. So that also I've seen a little bit of a theme as well with female GPs. And by the way, I mean, being a CXO of a company or a successful entrepreneur, you can always invest on the side with the platforms that, like Julie's platform, or the funds that Alex, Mary, and Carrie are running, or us, and learn that for the time that you're ready to 100% devote your time and bandwidth to this industry. So how much time do we have?
You've got a good 30 minutes, but I wanted to hopefully talk a little bit about geographic diversity.
Yeah.
Because I know we've done a lot of Silicon Valley today, but we've got probably one of the best female investors in South Florida on the phone, and one of the best female investors in Texas on the phone right there.
Sure.
So maybe we can get some of their points of view about how it's different, you know, and maybe not as progressive in some respects.
And also in the other parts of the world, you know, we are investing everywhere almost around the world, and we see quality deal flow, very reasonably valued assets all over the world. And especially after COVID, thanks to Zoom and this virtual collaboration aside, we get to see a lot of deals, because now for them, it's just taking a Zoom link to come and present to us. And honestly, most of the time until the last minute, we don't even ask where you have been incorporated, because they look so Silicon Valley. I mean, they run this business exactly with the same style that we're running our firms in Silicon Valley. So we ask and say, oh, wow, you're incorporated in somewhere in Africa or Asia. So we don't even get to that point soon.
Right. So processes become globalized.
Yes, definitely. So yeah, let's talk.
Yeah, I'll just give a short answer. So we're in Austin, and so we, no offense to people in the room in Palo Alto, but we essentially invest everywhere except the Bay Area. I mean, we don't not look at all, but we use that as a filter because of, you know, selection bias. We're probably not likely to see the best deals in Silicon Valley when you guys are all, you know, meeting at the same cafes and stuff there. But we also take a pretty different look. If you take a traditional Silicon Valley fund as taking, you know, hey, we're going to do 10 deals, nine failures in one, you know, unicorn, we're looking for more operationally efficient kind of risk, you know, operational risk, and like more capitally efficient companies, and looking for, you know, sort of, you know, more hits across the portfolio, and where returns or where exits are actually happening, right? The $100 to $120 million exits, not billions. And that's a totally different strategy, but it works really well with the kind of companies we're seeing. So the companies we see on average, if the average seed deal, not taking some of the big, you know, biotech, et cetera, is like a $3.5 million raise, across our portfolio, our companies are raising like 1.5 for seed, so much smaller, using less money, and then the valuations are just much lower. So our model is probably totally different than the rest of y'all's. And you know, I just said y'all, so I'm really emphasizing the Texas point. But we're really just taking a really different approach. So when you're looking for diversification, it's not just the deals and the geographies in which we're looking. We're looking at different business models, different growth trajectories, and taking a different approach to portfolio diversifications. And it's partly because of the kind of deals we see outside of the Valley, et cetera, and what we're screening for.
But let's just clarify, even though Carrie just said y'all, she's a Harvard MBA.
you acquire, it's like an important part of
They don't have a diction class at Harvard.
But I think one of the things that is interesting with where Carrie is, because I do a lot of stuff in Austin, is that because so much tech is migrating to Austin right now, and historically, a lot of the great startups have come out of the established tech firms like Google, Facebook, whatever, that there's a possibility that Carrie could really benefit from that whole trickle of people leaving Google Austin to go and do stuff on their own in Austin. Carrie?
No, I mean, totally. Like, you know, there's a lot of debate every day, all day about how does Austin become the next Silicon Valley, or should Austin become the next its own thing and differentiate, right? And so we're kind of trying to take the benefits and assets of those big companies and the people rolling out of them, but also do things in our weird keep Austin weird kind of way. And that's really just sort of, I think, a different approach to how the startups grow. And, you know, they're not probably going to take the huge, big pools of capital that they can get elsewhere and spend on branding and things. They're going to be a lot more scrappy and be, you know, analytics driven around their CAC LTV ratio, et cetera. So, you know, there's just, I think, different points of view around how to invest, not just who the companies are in which to invest in different geographies.
I just want to bring up Alexandra, because Alexandra knows New York and Florida very well. And I mean, obviously she invests globally. But Alexandra, can you talk a little about that as well? Like, you know, from where you're based, what you expect to see, and what
well, actually, ironically, our second company is based in Austin.
No way.
Yeah, so, you know, being based in Miami, especially now, there's so much movement similar to Austin. So many companies are relocating, people are relocating. There's a lot happening in Miami tech and crypto, which is not necessarily, it's not our focus, but I think there's just a lot of momentum. It's a very welcoming international city. So a lot of our a lot of our LPs are from Latin America. In terms of deal flow, you know, I think that maybe similar to what Carrie said, you know, we're not, most of our pipeline isn't coming out of Silicon Valley. Would we invest there? Yes, we would, but it's maybe not necessarily a priority. I think we're really, since we have a specific sector and stage focus, we're open-minded. We've looked at businesses from other countries wanting to really prioritize the US. We'd look at US companies wanting to expand in markets where we can add value. I think when you're not in, let's say, Silicon Valley or even New York, or if you're biotech, Boston or something like that, I think you're maybe less kind of in this herd mentality and open-minded, and people are also very generous in making introductions and whatnot. And one thing I wanted to say, actually, to some of the earlier comments about just diversifying cap tables, one thing I've been noticing, I've just been receiving a lot of kind of personal angel deal flow, is seeing so many SPVs being created specifically with the intention of diversifying cap tables. So I get, I mean, at least 5 a week. Where
the angels, my God, they did 230 investment SPVs in the last quarter. One of them was $17 million. Like,
that's awesome.
That's stunning. They're moving massive money in SPVs. Anyway, sorry to interrupt, but
and SPV has a lot, and that's the model that we picked, because we felt that, you know, first of all, it's company-based investment, so you don't have to, you know, give a few $1 million to a firm without having any visibility to the deals that they're bringing. It's a great learning process because you get the memo, they do the due diligence, like at least we do, maybe even more thorough than VCs, because they have to deploy that money in a certain amount of time, but we don't have to do that. So we really have to make sure that this deal is good. Since last May, during the COVID, our firm has looked into over 1,500 deals to pick 12. right? So this is not easy. So we have to really work hard to make sure that these deals are definitely creating value for our LPs. And this SPV also provides tax exemptions like QSBS that is not possible if you be an LP in a venture firm, in a traditional VC firm. But now you can use these tax exemptions, and we make sure that we are negotiating pro rata for follow on later series when the company is accomplishing what we want. Then you have the choice to go and fill your pro rata, which is I think makes this model a perfect way for people who are trying to get into the investment industry for the first time.
Actually, pro rata rights are the #1 reason family offices invest in venture, because they want to get to the next round where they can actually use
they
more
do
money,
but then they don't have, I mean, they don't, again, it's throughout the entire portfolio. But here we allow them to look at the deal and see if it's performing. I go and fill my pro rata, otherwise I don't have
so
to.
it's not opaque.
Exactly.
Perfect. Yes.
So one more question from the panel. You guys all have raised money, fund for your venture capital firm. How was different approaching family funds compared to endowments or other institutional investors?
I love family offices. I just want to say they're amazing. I would much prefer.
Easier, harder, what are the criteria that you need to be mindful about when you're approaching family funds?
Just much more open-minded. I mean, I'm raising a first-time fund, and there's so many institutions that, will just say, sorry, we don't invest in first-time funds, which there's so many statistics around that, and it's such a shame. And a lot of
statistics shows that they perform better than older funds.
So I think family offices, I think, recognize there's a lot of opportunity. I mean, similar to what many of us have said today. So we think they're awesome. That's probably why we're all excited to get on this panel together with you today. And Marty, you're terrific for putting this together. But
well, wouldn't you say, Alexandra, that most family offices are more like talking to a person that can pivot quickly? And I think institutions, to me, the runway is just much longer. So I can get a family office to make a decision and tomorrow, it doesn't have to take forever. So I also think, if you think about like someone who who's sort of recognizing a trend around ESG or women or people of color and where the dollars are, people are making more money and there's more windows of opportunity. I think family offices can just move faster. So they're in a better position.
We're starting to see the family offices who are invested in our fund that having more diverse family members at the table. And so, for example, our most recent investment was into a company that focuses on women's sexual health and literally helping with the kinds of things like libido or, pain with sex and things like that, Viagra got lots of attention and dollars, but it hasn't been a topic that's been addressed, even though something like 40% of US women actually have some sort of, ailment in that area. And we thought our more traditional family offices who do a lot of co-investing were gonna kind of shy away. And they did stay off camera during the Zoom call with the founder and then wrote a bunch of big co-investing checks. And I think it was the sisters and the daughters, et cetera, or the husbands who were dealing with the ailments of their families. But I really did think we're starting to see them really engage. We do a lot with women's health and topics that have been traditionally things that male VCs kind of didn't know how to
the problems that traditional VCs don't see as problems.
Yeah, and I would say they just don't actually face the problem. And so anyways, we're feeling like the family offices are actually bringing the family members to the table to make these decisions, not just the CFO, in the office looking at the numbers.
It's not opportunistic.
And less of the reinforcing pattern bias in there.
And I would say if you're a family office that, let's say, made a lot of your money on transportation or in a certain sector or in biology, you just tend to gravitate also towards, some can be, I won't say niche because the market's niche, but like a more specialized also VC that you can see some of those deal flows as well. And you'll be quicker to make those decisions versus a general kind of, I'm investing in VC.
Okay, any burning comments or statistics or study that you want to share with the panel today? Any of you?
So I have two questions.
Actually, yeah.
Okay, so my first one is, I think the co-investment opportunity is really huge. So there's a company called Gen X 360. They're like a private equity firm that started 10 or 15 years ago. The there were three partners who started were African American, and one of them had run the second largest broker dealer in the country, and Black-owned broker dealer. The other one was one of the presidents of a GE affiliate, and then the third one was also like a lawyer heavily involved in private equity in the past. And so they had started, and they had about 70 million under management, and Fortress had a deal in front of them, and so they had to do all kinds of compliance, like EEOC, et cetera, and they went to EEOC and said, look, if we just find somebody to co-invest with us who's minority owned, can we get out of all those compliance issues? Said, yeah, sure. So they went to Gen X Research and said, look, if you can put in a nut of like 30 million, we'll give you your money back in a year. So they put a nut in, they got their money back and plus another one, so they got a 2x in a year. And then Gen X 360 took their success and went to Princeton University, and Princeton University put $100 million into them. So I think that people, they're missing out on that co-investment aspect and the ability, you guys are thinking about it from an SPV point of view. I'm wondering, how do you keep your ears open to that, kind of like your radar, et cetera. Any thoughts? I've seen the same thing with a Texas firm as well. There was a Texas firm owned by a prominent Texas family where one of the sons is half Hispanic. And they also got a lot of government assistance. I think they got the contracts to build 30 Starbucks at about half the price. And then they, after they built them, they sold it at full price, and they had tremendous gains.
Yeah,
so
and
I'll let you guess who the famous family is.
I think it alludes back to the kind of the piece we were talking about at the beginning, where you get access. So as a female GP, you probably get access to more female founders just because they might gravitate towards you, and you get access to the networks you have. So I think it is a plus that I'm seeing. And back to the comment I made about founders caring about their cap table, I think you'll get differentiated access as a result of it as well. Yeah.
Yeah. In terms of SPV model, I mean, I know it's been there forever, but nowadays we see that this model is more coming towards the smaller accredited investors. We're trying to find all these accredited investors first, and I'm sure the next step would be finding every compliance. At the beginning we just focus on tax benefits and anything that can make our pitch easier for these co-investors and LPs and family funds. But the next natural step will be finding these ways to create even more value.
Larger institutional players can co-invest with.
Exactly. Sure. Yeah. And then I'm seeing actually in the last month, I had 3 pitches coming to us regarding platforms that are exactly doing this, providing liquidity for these investors. And I can talk about them online, but very, very interesting models that, they're trying to solve existing problems within these new models of investment.
Mm-hmm. Do the people online have any thoughts about this? I'm sorry, Julie. I'm sorry to cut you off. Julie?
No, you didn't cut me off. I mean, all of us, I don't know. I think that's part of the structure of all venture firms. It's a little bit different for SPVs, but to allow for ongoing rights. I think actually, Mary, you had touched on a point earlier that I thought if you could underscore a little bit, a little bit more about sort of the emerging manager stage and investment returns and stuff. I don't know. I don't want to take your thunder, but I think you had some compelling things you were sort of chatting about earlier that I would love to just.
Yeah, I think a couple of us were alluding to the point that emerging managers have better returns, period. Right? Everybody should know that. If you guys are on these webinars trying to find places to invest, emerging managers have better returns. They have for quite a while. Fund of funds like Sandana, have picked up on that and made tons of money. And also, we've been saying that family offices, we love family offices because these smaller funds, which tend to be more diverse in terms of their leadership and then in turn what they invest in as a side product, right? Like Marty, that sort of edge case you're describing, I've literally never seen anything like that. That's really a side case, like that's cool, but like I'm investing in drug companies, right? Globally, right? That's what I do. It happens to be that I happen to be a female, GP, but I think the more sort of useful theme here is invest in emerging managers, and by accident, you also invest in diverse startups, and you will get your arbitrage opportunity, which, you know, True Ventures is very clearly going after, and you'll make more money.
Yeah, give us a try and see the return.
I have a second question. So my second question is, what about these large, you know, groups of organized women who invest as angels? I mean, there's probably 5 or 10 in the New York City area. I don't know about this area, but about Silicon Valley. But you know, are there such groups? I mean, there are these, you know, Rosemary Sagar, who runs a family office, Mark Kingdon's family office. She ran a group for 10 to 15 years in New York City of, you know, there's a lot of very successful professional women.
Yeah, that's what Julie does with how women invest.
Well, ours isn't an angel group; it's a venture fund.
Venture fund,
we have GPs making the investments, but I mean, there are all kinds of you know, ways that all people, including women, are investing. But you know, there's a different risk profile. If you're doing an angel investment directly into a company, obviously the risk is much higher if you're not able to do that, spread it around to 10 or more. So if you invest in venture fund, I think most people understand that a professionally run venture firm has potentially, nobody ever wants to talk about, you know, can't promise any returns, but potentially better returns, right? Than 1 or 2 single angel investments.
Right. Yeah. I mean, so these people are not just angel investors, they're LPs, right? They invest in funds as well. So that's how they get ideas.
Yeah.
About what
well, if they're LPs in a venture fund, then it's exactly what I have. We have 211 women executives who are LPs, diverse women, C-suite folks who are investors in our fund. What's happened as a result is we get better deal flow because all these women are out there. They're seeing the gaps in the market, or seeing the products that are being produced to solve for the things they need to buy. And then we actually put a SWAT team together. So if we make an investment, we have 5 of the top executive women who are either your customers or who otherwise understand sort of what's going on. They make business development introductions. So, I mean, just to reinforce Mary's point about emerging managers, you know, we got a whole lot of people making sure these companies are super successful. One of our investments, we had someone who took our board seat on our behalf, one of our LPs, then she ended up going in-house as the COO and president, and we recommended their new CTO. So, you know, that's what you can do. It's sort of like I have 200 legs of executives that are helping us.
What I like about this, yeah, what I like about this group, I mean, how women invest, we have a Slack channel, right? We're working as a team, you know, so the ideas will be exposed in the Slack channel to all of us, and it's the wisdom of room, right? That especially women investors are promoting. And I think with that, you can see, you know, how these kind of initiatives can be successful in long run. So great. So if there's any question from the audience, we would love to catch it. Otherwise, we're the last panel, the least, but but not the.
Would women be more inclined to invest in underserved communities and address the STEM issues?
Well, you know, I can see in my experience, and I pose it to the panel as well, impact investment for women is it's something that I see all around. So it's much easier for women to digest those kind of problems and get excited about, you know, putting their forces and financial resources behind to solve. So anything regarding that, I think it's just exciting for women, because we're mothers, we're, you know, and we feel those pains. But honestly, in terms of pipeline, I see a lot of diversity. You know, we get deals from different spaces. Consumer products, yes. Biotech, we see a lot of women in biotechs. We're not investing, unfortunately, in healthcare or biotechnology. I invest personally, but not through the fund. But I see a lot of deals from that industry, which to me is impact investment, because you're solving.
I agree.
Yeah, so I would that is what we do, is invest in, we in fact have a couple of COVID treatments in our portfolio companies, but there are a lot more women in life sciences relative to other places, and they don't quite get weeded out and prevented from advancing the way they do in other industries. You know, the question, would women be more likely to, women is over half the world. That's a really hard question to answer. here, but this woman is investing in COVID and has invested in end-to-end actives my whole career. So that's all I can say.
And we're exclusively an impact fund. So we invest exclusively not only in women-led companies, but those that improve human and or environmental health. And for us, that's part of the same thesis. We actually do see more women starting companies in areas that are impact oriented. And there is some data actually to show that women tend to invest in things that have an impact. I think, you know, the key thing to note is that we're actually doing it as a financial thesis because we believe the acquirers are needing to bring in more healthy and greener solutions because of consumer demand. And sometimes, frankly, in the buy or build, you know, decision, they don't have the credibility with the new generation of consumers to do the build. So we actually think it's, while it's impact in terms of the impact it can have on the world, and we do measure against the SDG goals and an impact metric, it's because we think, again, we'll have an outsized return from it, right? And so impact doesn't have to mean concessionary returns, but I think you have to check, you know, what the thesis is of the investor with whom you're speaking. If that's
well, I mean, accurate, the data says exactly what you just said, like literally women have many more bottom line returns that have social ESG results, frankly. So it just is. You know, there are a lot of wonderful men doing things.
Well, and then there's this cool gender dividend, right? So that when women come into increased wealth, either the entrepreneurs having an exit or the investors, you know, having great returns, they actually reinvest two times the rate of those sort of increased proceeds into their family and their communities, health, education, et cetera. And so it becomes a virtuous cycle.
There are also some other great things. We were all watching the news this year about women leaving the workforce. Women-run companies hire 6 times more women than other companies. So, you know, there's some great benefits to the entire economy.
Well. Yeah. Huh? And promoting them to leadership roles as well. So that's another data. So, and I think that's a vicious cycle. So if we don't have more women in STEM and then leadership and then entrepreneurship, then we're not going to have enough investors. So,
Can we just get a close? I want everybody to take like 1 minute about something that they're doing now that's really great, or they're raising a fund about their fund and what people should know about their fund and when they're closing or if they've done a first close. So one of the people who are on Zoom, you know, talk first, and then we'll get a closing from Susan and Sandra. So, Alexandra?
So Alex,
sure, I can check
alphabetically.
So we've raised 80 million so far for Clerisy. We're coming up on our final close, October 5th. So if anyone could be interested in consumer, techsumer, growth equity stage companies, and we offer free co-investment to our LPs in this first fund. And I put my email on the chat, alexandra@clerisy.com.
We are also fundraising. We're fundraising for Fund 2. It will be a $30 million fund. We did a first close on 10 of the planned 30. And so we're doing another close in November, but we have a longer, you know, we have until 2022 to do the full fundraise. We did offer free co-investing for Fund 1. For Fund 2, we are going to put SPVs together around it, but with 0 and 10 terms. And we do negotiate for pro rata rights for the co-investors in those deals as well. And in fact, we did have a lot of co-investing in Fund 1, which was great. So we've got
that's really great, Karen. That's smart. Good work.
We just started last week for raising money for a $20 million fund, our second fund, and have soft circled a good percentage of that so far. So hopefully we'll wrap that up by December, and then we'll have an institutional focused fund probably next year for a little later stage investing. So happy to talk to anybody about long-term as well. Susan's on one of my boards, and it's of a nonprofit that's trying to address all kinds of inequity. And so we've got a big effort and to really disrupt this whole conversation that we're talking about. So anyone who is interested in getting involved in that, speaking, et cetera, our goal is to get $3 billion moved in the next couple of years, 10,000 women investing $100,000 on average each in first-time investments in venture. Our second is to build a $1 billion firm. Looks like we're on our way with a $40 million verbal commitment for our third fund, and then to do a fund-to-fund so that that's easier for first-time venture firms to be able to get going. So So lots of fun things to do to play in the sandbox in the future.
Great. And Mary, you're the
Mary had to jump.
Oh, Jasmine.
But if you guys want to give your closing comments on yourself.
Sure. Yeah. I think talking about all these initiatives and these great women establishing these platforms for more women to invest and more family funds to invest in female-led startups is something that we want to see more in the future. And this is opening a lot of doors to your wives, to your daughters, to your sisters. And this is really something that we should take on ourselves to do for the next generation. And hopefully we see more of you in whatever initiatives that we're involved in. And Pegah, would you like to?
Yeah, I was gonna say, I'm not raising a fund, but I'm going to invest in some of you people. So I'm going to contact you after this to become an LP. And I would say my big passion is access. So I think as female capital, kind of what we started with, I just don't think they're getting access to the best deals from LPs. And so for me, it's to what you were saying, Julie, about there's a lot of really extremely, educated and great positions that can help companies. They're just not in the flow of hearing about some of it. So I love that these women are doing this and also bringing those LPs into the day. So if you are a diverse LP and you want access to some of the late stage, really hard to get into deals that, everyone from Andreessen and Sequoia is going to also contact me as well.
Yeah, contact us.
Fantastic. Great job, guys.
Thanks, everyone.